Bang! Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem on how to properly record the selling side and purchasing side of inventory. So if you're unfamiliar with the inventory process, don't fret gang, I dropped a link to get you up to speed in no time. So with that being said, let's get it. So it tells us on November 4th, Kane Company sold merchandise inventory on account to Terran wholesalers, $12,000. That cost $4,800, turns 310 at 30. On November 5th, Terran wholesalers paid shipping of $30. Terran wholesalers paid the balance to Kane Company on November 13th. Both companies utilize a perpetual system, and sales are recorded at the net amount. Journalized Terran wholesale transactions and journalized Kane wholesale transactions. Alright gang, so this is a beautiful problem. I like this problem a lot. Why? Because it gives us an opportunity to see both sides of the gun. We are going to account for both the seller of this particular transaction as well as the buyer of this particular transaction. It's very important that you know the difference, because when you're a merchandising company and you're accounting for them, you must be able to recognize appropriately if you're purchasing or selling inventory and how to account for it successfully. So let's get to it. So requirement 1 wants us to journalize Terran wholesalers. So who's Terran? Terran is the actual buyer of the inventory. So we're on the purchasing side, gang. So it tells us that we purchased merchandise inventory on account for $12,000. Turns 310 net 30. All right, easy breezy gang. We're going to debit inventory and credit accounts payable for the $12,000. We're going to check the answer. Nice work gang. Next it tells us on November 5th, paid shipping of $30. Okay gang, so who paid the shipping charges? Terran paid the shipping charges. So we have to recognize whether this is freight in or freight out. And the rule of thumb tells us that any time that you pay for shipping charges to get the goods to you into the company, we consider that to be freight in. And freight in is always included in inventory. In contrast, if you're paying for shipping charges to get the goods out of the business to the purchaser, this is considered freight out. And freight out is normally recorded as an expense. So since we're dealing on the purchasing side, we're going to increase the cost of our inventory. So we're going to debit merchandise inventory and credit cash for the $30. We're going to check the answer. Excellent job, gang. Next, on November 13th, the company paid the balance to Kane Company. So we're dealing with a payment on the account, gang. And first things first, we have to recognize whether a discount was involved. And how are we going to do that? By looking at the discount terms. Originally, the discount terms were 310 net 30, which means that we were going to receive a 3% discount if we pay within 10 days from the initial sale. And since the initial purchase was on the 4th and the actual payment was on the 13th, a discount will be received. Now here's the deal. When we're on the purchasing side and we are receiving discounts, ultimately discounts affect the cost of inventory. Why? Because we know that inventory is always on the books at cost, gang. Thus, if we receive a discount, that will reduce the cost of inventory. Therefore, we must also reduce the inventory on the books for that discounted amount. So, first things first, we're going to debit accounts payable because it's a payment for the gross amount of $12,000. We're going to credit cash for the discounted amount of $12,000 minus 3%, which will give us a total of $11,640. And as you can see, gang, our debits and credits aren't equal, so we're not finished yet. But we've already mentioned that a discount received will reduce the cost of inventory. Therefore, we're going to credit inventory as well for the discounted amount, the 3% times $12,000, which is a total of $360. We're going to check the answer. Nice work, gang. Now that we've fully satisfied the transactions on the purchasing side, it is time to switch over to the selling side. So on November 4th, it told us that we sold merchandise inventory on account to Terran this time, $12,000 that cost $4,800, terms 310, net 30. So a couple of things, gang. We're on the selling side, and we know anytime that we have a sale, we have two separate transactions, one to recognize revenue and the other to recognize cost of goods sold. But we also must consider that now we're on the selling side, and we're going to automatically assume that our buyers are going to take advantage of the discount. Thus, our initial sales recording of revenue will be netted to the discounted amount. Therefore, we're going to debit accounts receivable for the netted amount of $12,000 minus 3%, which will give us $11,640. And we're going to credit sales revenue for the same amount. We're going to check the answer. Excellent job. But we're not finished recording the initial sale because we have to recognize the expense from selling the inventory. Thus, debiting cost of goods sold and crediting inventory at the $4,800. We're going to check the answer. Excellent job. And last but not least, we have to record the collection on account within the discount terms. And we already know why it's in the discount term from the previous side of the purchaser. So since we already assumed initially in the sales transaction that the buyer was going to take advantage of the discount, we're simply going to record this transaction at the already net amount, which means that we're going to debit cash and credit accounts receivable for the $11,640. We're going to check our answer. Beautiful work, gang. So there you have it, gang. A really beautiful explanation of how to manage both sides of the gun when dealing with selling or purchasing inventory. So if that light bulb clicked and you're further to chasing the bags with this accounting information, don't forget to like, subscribe, and share the channel with your friends so they can chase the bag as well. As always, I'm Dr. Who, and I love the time and energy that you guys give to me, and I will see you soon. Bags!